Hi, Nifty is on its longest weekly losing streak since August 2023. That is, 5 weekly red candles have been formed in Nifty, and if this week also closes in the red, it will be the first time since 2013 where Nifty is forming 6 red weekly candles. So I was personally very curious. My mutual fund investments and my portfolio also has slightly fallen, and I wanted to know the real reasons why Nifty and the market is behaving this way. I'm making this video because I was also personally very interested in understanding why the Indian markets are coming under pressure week after week, and with that I found 4 simple reasons for the same. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. Reason number 1, FIAs continue or they have started selling again aggressively in the Indian market. In the month of July, DIIs or domestic institutional investors bought for every single day except one. Meanwhile, FIAs sold for every single day except 5. That means FIAs heavily sold throughout the month, and they sold for more than 47,000 crores in the cash market. And in the first few days of August itself, they've already sold for more than 10,000 crore rupees. And if you're looking at the FIA options data, the futures and options data, you can see that heavy short positions have been made in Nifty futures as well as the option segment. Now, while this itself is a strong reason for the market to fall, we should look a level deeper and try to understand why are FIAs selling the way they are selling. And that brings us to the second reason, which is Donald Trump's tariffs on India. So last week, Trump imposed a 25% tariff on Indian imports into the US. And after that, this week, he imposed an additional 25% tariff. He has come out and said that while India is a really good friend, India is not a good trade partner to the US, and that they're also not at all happy with how India is going ahead with Russian oil purchase and Russian defense equipment purchase and not giving this business to US and its allies. And this obviously is creating a lot of tension in the market, but you can see by now it's sort of cooling off, and that brings us to the third reason. And in my opinion, things start to get a lot more fundamental here. So if you're looking at the Q1, the quarterly results which started coming out last month, things have not been looking great. In fact, if you're looking at the results of the major private sector banks in India, there has only been a very modest or very minimal growth of 2% comparing to last year. And people are expecting 10, 12, 15% returns from the market when the earnings are not going up. IT services companies are also not able to grow. And in fact, their revenues are also stagnating. If you're looking at the reasons, one of the major reasons there is the impact of AI. In this sector particularly, AI is going to be causing a lot of troubles. In the first quarter, you have seen how that started to shape up, and also in the coming quarters, you'll be seeing its effects. But the second reason why you'll be seeing IT companies come under a lot of pressure is how a lot of large MNCs, a lot of large companies worldwide are opening their global capability centers or their offshore entities in India. So the major advantage that companies like Infosys, TCS and others had is that they had access to cheap Indian labor. Now, if all the global companies who are their clients start coming to India and start setting up their own offices, you can imagine that the listed companies in India will come under a lot of pressure. And that is why even recently TCS announced that they're going to let go of nearly 4% of their staff, or 12,000 employees in total. But don't be fooled thinking that AI is the only reason here. The second reason which we discussed about is also going to shape how the Indian IT stocks are going to move over the upcoming 2 to 3 years. Now, the fourth reason is the slow and silent depreciation of the Indian rupee compared to the US dollar. If you're looking at the charts, you can see that rupee touched a mark of 88 against the dollar. Its worst level ever, and this is causing a lot of panic, especially to foreign institutional investors. So FIAs have a lot of avenues to invest in. They have the US markets, they have US equities, they have US bonds and whatnot. And along with that, they also have access to international markets. So if you're considering an international market like India, where the stock market itself is giving a return of 8% every year, and the rupee or the currency of that country is getting devalued by 4% every year, the real returns that FIAs are getting is only 4%. So why should these FIAs come into the Indian equity market and try to make 4 or 5% returns when they can make it very easily just by investing into US Treasury bonds? That is a question a lot of people are raising, and that's why FIAs also have been heavily selling in our market. Despite all of these problems, the market is still holding on strong, in my opinion. And it is very clear that the market is being held strong, being supported by the domestic institutional investors, that is the mutual funds as well as the insurance companies in the country. Despite all of these problems, there are multiple companies which are coming out with good results and showing a positive stock movement also. In fact, there are pockets where FIAs are even increasing their shareholdings. So my personal opinion is that there are a lot of macros at play here. The market is not going to be as simple as invest blindly and get 12, 13, 14% returns over the upcoming 1 year. Lot of things that you should understand, including the Trump tariffs, including how the quarterly results of major companies in India are going to come out. And your goal should be to identify few pockets of growth, few growth stocks which can potentially outperform the market. Yes, there are still companies like that which are posting good results, which are showing good positive direction for their stock movements, which are showing increased investments by FIAs, even though largely they're getting out of Indian markets. So if you're able to identify these companies, identify these sectors, I think you'll be able to sustain through whatever fall the market is seeing right now. If you're asking me how all these falls or all these pressures are modifying my investment decisions, personally, I'm not modifying anything. My SIPs into the markets are continuing, and the goal there is to take advantage of rupee cost averaging. That is, whenever the markets are down, I'll be able to accumulate more units of my mutual funds whenever I'm investing at the beginning of the month. So hope you got some value from this video and you deeply understood the 4 major reasons why the Indian markets are falling currently. If you like the video, make sure you hit the like button and subscribe for more such content from Market Feed. This is Ajay Ajith signing off. See you all. Bye bye.